Good morning, everyone, and welcome to the European crossover webinar. And I'll give an extra minute. Bear with me. Had a hard time going to sleep last night after being off all those days, and I woke up by myself over an hour ago. So I laid back to sleep, and the alarm never went off. Sounds crazy, but that's exactly what happened. Hang on. We'll throw out the data. So hang on. And I'll just give it a couple, not a couple minutes, but just a moment to let everybody come in. Okay, we're going to get started now. So coming into today, we do have Dallas Fed Manufacturing at 10:30 a.m. Eastern. It's kind of weird that it has it at that time. That's odd. Look, it has it here, but the time is, but some of the earlier reports are set afterwards. But anyway, Case Shiller at 9 a.m. Eastern, and Texas Services Outlook at 9:30. I think the reason these two are here together is because the data got messed up because of Christmas. I would think that's the only reason I can think of. Oh wow, no, the K show is tomorrow, so the only thing we have today is going to be Dallas Fed Manufacturing. So that is correct. Let's go on and take a look where we stand here as far as FX. And let's take a look at the Russell. Look at that. Still way up here in the stars. Hang on a moment. And look at the euro. Doing pretty well. It looked like it might be susceptible to a little bit of a pullback because if you look here, we had a little bit of a hangman there, but a strong close. Right here, look, came right back. But look how quickly we gave it up. Then we had these two wicks here suggesting a potential slide. And look, but I know what the reason we're moving up right now is because, once again, indices are way up here in the stars. So that's giving us that bid, but certainly did look susceptible. We'll take a look at the cable. And there we are right here, still holding. That is incredible, honestly, how I happened to wake up because, like I said, the alarm did not go off. That is crazy. Really odd. And I actually have two different clocks with alarms to go off. So that's really weird. Anyway, and let's take a look at where we are with the Aussie dollar. And you can see right here, we've got that key resistance right here, 76.23. I did with the analysis, if we get two consecutive daily closes above that level, that would open up a leg to go higher, but that's exactly what we need. And we'll take a quick look at the dollar CAD. Under a little bit of a pressure here. I suppose it could have been worse. And with that said, let's go on and take a look at where we stand right now. Bear with me. It looks like it's not getting any. Bear with me. Hold on. Oh, yeah. Okay, there we are. For a second, I thought we weren't even on the air, so hang on one moment. That would have been unfortunate. And Irene says, Paul, what do you think about Apple for today's trade? I think we have to let it see how things open up right now. For a moment, I thought we weren't even on the air. I was thinking, wait a minute, am I going crazy? And we can go and take a look at that. You can see here that we're gapping up a little bit higher. We're not too crazy up in here, but let's move this out of the way. If you remember on Apple, and let's go to the daily. Remember, we needed to get above that 130 area here. And look, and then there's 130.42, the 78%. We jumped above it and we closed here. And even on the 24th, we closed slightly lower, but we're still holding up here. Now, like I said, we're above the area that 130.42. We're actually at 131, not a whole lot, but we're still above this. So we're still holding up okay. The only thing is we're going to have to see now. We saw that Trump had signed the COVID relief bill after making a big stink about it. So he turns around and caves in. And we'll have to see how I wouldn't do anything until after about an hour after the cash equity open. Let's go and move into the main, not the main screen, but where the indices are. And you can see here on the NQ, you can see right there is the all-time high right there. And we just took it out by a hair, but we're not above it right now. And let's take a look at the S&Ps. Same thing here. We actually haven't even taken out all-time high yet. I mean, obviously we're right there, but look, we haven't even taken it out yet. I think, as I mentioned, have to see how we open up. And I really wouldn't, especially because remember, it's going to be, I wouldn't say it's going to be thin, but it's still, the trading is a bit suspect as we go into the last week. And I really wouldn't do anything until we get into the after we get past the first hour, because I think what they want to do is want to see if we blow any stops here. And now that he did sign the COVID relief, so I don't want to say it's anticlimactic, but it's like, okay, what are we going to do now? And is there anything else left to push? I'm not saying that this market is ready to turn around and fall apart, but you're going to have to ask, what is the catalyst to move us higher at this point? So people might look around and we'll have to see how we do react. But like I said, they may look around and say, well, who's else going to be left to buy? We'll have to see. Now, right now that we saw that look with the Russell, it's still doing pretty well. And we know this it's still on the buy mode, even though it's been rather quiet. And we've traded, look how long we've been in this range here. And we just finally broke out here. But you can see that range between 12,645 up to what, about 12,755. And we're just sitting here right now. I pointed zeros here for one was a gravestone doji here, and the other one was a hanging man. The market did react to both of those. So we'll have to see what happens here. We actually can go on in. As much trouble as I had sleeping last night because been off, I'm surprised I just happened to wake up without the stupid alarm going off. I don't know what the heck happened there. But anyway, nonetheless, you can see that range we're in right here. And obviously, we're suspect to maybe sliding back in below the range. Doesn't mean that we turn around and head south, but we'll have to see what's out there to drive or push us. You can see here, we made up to 12,798. We've come off about, 22 handles. And then we take a look here at the S&Ps. They've come off a little bit, not a whole lot. 5 handles. They actually dropped more. 7 handles rallied up a little bit. We're kind of stuck here. And then we take a look here at, let's go back to the after hours or pre-market hours. As I mentioned, you can see Apple here with a little bit of a gap. Here's, let me make sure that we're on the same page. Microsoft here also with the gap here. We're looking at a 2-hour chart. Amazon, this on daily. Let's take a look on a 2-hour chart. A little bit of a gap here. Nothing like too crazy. Google, we're actually flat, just a tad lower. Nvidia, flat. And Facebook, you know see how Facebook's just barely been hanging on this 267. Let's see what they're at now. 269, okay. And Tesla, about $3 higher. And Netflix, just about 50 cents higher. So nothing too crazy, nothing like, wow, they signed this stimulus, we're going to the moon. Wasn't the stimulus, well, COVID, but I mean, nothing to give you that type of a drive. Doesn't mean we're going to turn around and fall apart, but once again, like I said, you can see here, there's nothing jumping out at you. And if you go back in here, let's actually go into the 30-minute. Of the equities, not equities, but I mean the indices. And look at here, look at NQ futures. You see here, we got up here, and look, we just kind of rolled back here. We formed a little bit of a hangman here, and we're just trading real quiet in here. Obviously, it doesn't look like as much of a movement on a 2-hour chart. But you can see here a little bit more clear here on the 30-minute. And Irene was asking once again about Tesla. And nothing real, I mean, we're just up here. But once again, you can see here I have this trend line on the 2-hour chart. Key for it to get above right now would be 677.35. It's not too far above, but that would be key for this market to get above. There we go. So let's go on and pull up the news. Here's an interesting story here. More generalized stories right now, I guess so, since it's start of the week and we're off on holiday. Big tech bets and cryptocurrencies power the 2020's top U.S. funds. Outsized bets on large U.S. technology companies and emerging cryptocurrencies fueled the year's top performing U.S. mutual fund and exchange traded funds as the coronavirus pandemic upended global markets, with funds that bets on oil and gas companies fell nearly 100%, according to data from Fund Tracker Morningstar. The year was a challenge like few others for the 21.3 trillion mutual fund and 4.4 trillion ETF industry. The U.S. stocks plunged in March before staging a more than 60% comeback. Overall, those who played risk assets were rewarded. The year's best fund, Grayscale Ethereum Trust Fund, which holds Ethereum, the world's second largest cryptocurrency after Bitcoin, surged 333% for the year through December 9th, according to Morningstar. Tech was another clear winner for the pandemic as people move from offices to work from home and conduct their businesses by video call while ordering goods online. And we mentioned about PayPal doing really well, and I can bring that up. Tech was another clear winner for the pandemic. We just said that. Actively managed funds that do not use leverage. The ARK innovation posted the biggest overall returns with 144%. When fund management swings for the fences with big bets on a handful of growth names, they hit home runs and they may also strike out, said Todd Rosenblum. The worst performing funds were those that took a long bet on oil and gas stocks. And matter of fact, we'll go and take a look real quick. Two that I keep track on, just because they've moved a lot or been darling for some. Obviously, that's a play into that, which is Peloton. Look at Peloton, another new all-time high, and we'll come down to PayPal. A tad bit weaker, but that's a play also on the whole pandemic thing, and of course Peloton. Dollar dithers in thin trade as Trump passes pandemic aid package. The dollar largely shrugged off Trump's decision to relent on the threat to block the COVID-19 aid bill. And thin trading on Monday, the pound hovered below a 2.5-year high in Asian session. Sterling added 0.2 to 35.65. Trump signed into law the $2.3 trillion pandemic aid spending package, averting a federal government shutdown that would have started on Tuesday. Earlier, he had cryptically tweeted, "Good news on COVID relief bill." He previously demanded an increase in stimulus checks for struggling Americans. Euro was changed to 22.16. While last week's Brexit deal came as a relief to investors, the bare bones nature of the pact leaves Britain far more detached from the EU, analysts said, suggesting the discount that has dogged UK assets since 2016 will not vanish soon. Brussels has made no decision on whether to grant Britain access to the bloc's financial market. Mitsui Iwazumi, chief FX strategist at Daiwa, expects the pound and the euro to decline against the dollar, reaching 130 and 115 respectively by the end of the summer. Regardless of the Brexit deal, the cable will be down, he said. It's buy the rumors, sell the fact. And that's all on those two. We might as well just move into the analysis. Let's just go on and move into that now. Okay, let's start with the euro. So the euro, although remaining close to 2,200, appears to be showing signs of exhaustion at this upper threshold. Resistance will be 22.41 with support at 20.73. So 22.41. Of course, we're a bit stronger because of equities being higher. and 2073. Onto the cable. So cable is all set all over the road like a drunk driver. The market does not have a specific direction other than an upward bias. Levels ahead are 35.85 with 34.45 as support. So 35.85 and 34.45. 35.85. 34.55 for support. Now to the Aussie dollar. The Aussie continues to stay bid despite a 4-week-old run. Key for another leg up will be 2 consecutive daily closes above upside resistance, which is 76.23. You can see that we noted that at the beginning, with support at 75.20. But we would need 2 consecutive daily closes above that, and that would spark a new leg up. Onto the Kiwi. So the Kiwi is mirroring its cousin, the Aussie, in price structure. 2 consecutive daily closes above the resistance of 71.52 will augur for a new leg up. Support is going to be 70.02. Not too far away from 71.52 here. With that, we're going to move into the dollar CAD. So the dollar CAD paired back the last 2 days after a 200 plus pip short covering rally. Support to start the week will be 27.85 with resistance at 29.07. Onto the dollar peso. So the dollar peso continues to languish. Overall range has been 1967 to 2023. Support to start the week will be 2076 with resistance at 2014. Obviously, that wasn't right. Didn't mean 2076. I meant 1976, clearly. And that seems like a super wide range, but that's exactly what I wanted to have here. Because you can see here, essentially we traded 1967 up here to 2023, and you can see here, we're just stuck in the middle. And this thing is just as easily apt to slide as it is to push higher within this range. That's why I'm looking at these 2 wide ranges. But 1976 on the low side for today with 2014 on the upside. Sounds wide, but that's the way this market's been trading. And really with no rhyme or reason, if you see here, look at this. Up, after down, up, almost all the way down, wildly up, then come on. Here we are sliding back down again. So nothing there. On to the dollar yen. So the dollar yen closed slightly higher at the end, just end of the week, just above, just below resistance of 375. You can see that. Resistance to start the week will be 390, with support at 327. This one's kind of dead in the water here. So 327 on the downside. Into the dollar index. So the dollar index is attempting to hold the 89.75 level. Immediate resistance to start the week is 90.67, with 2 consecutive closes above 91.22 to confirm a short-term bottom. Support will be 89.89. So 89.89. And 90.67 on the upside. And with that, we'll move into the cross rates. Still continue to move a little bit higher here. The Kiwi yen saw follow through on Thursday from Wednesday's bullish engulfing cloud. You can see here, and follow through on Thursday. Here we are now. Resistance will be 70.45 with support at 74.05 with support at 73.06. On to the euro pound. So the euro pound has traded 89.50 to 92.25, obviously a very wide range for good reason because of Brexit. Only thing that matters at this point are the levels. To start the week, resistance is going to be 90.95 with support at 89.46. And you can see we took a stab, obviously on Friday, that wouldn't have been Friday, it would have been Thursday, but you can see here we're kind of, I wouldn't say real quiet trading compared to what we had recently, yes, but once again, on the downside, 89.46 with upside 90.95. Onto the euro on. Actually, close the week, you can see here lower, and now we're trying to come back here. A moment. So the euro odd closed the week at the new lows. Support comes in at 60 cents even, followed by 69.60 with resistance at 61.38. So we're trying to make a little move up in here. We actually, right now, we're engulfing the, although not quite engulfed, we have to go a little bit higher, but support's going to be 60 even. and 61.38 on the upside. On to the Euro Kiwi. So the Euro Kiwi has been flailing between 71 and 73 over the last 2 weeks. Support is going to be 70.89 with resistance at 72.80. Two consecutive daily closes on either side would launch an extended move. So 72.80, yeah, that's what it would be in order to push it. We're just dead in the water right now. So a little bit of a move here it would take, but be 72.80. And 70.89 on the downside. Kind of stuck in the middle here at this key 71.50 at level here. And onto the Aussie yen. So the Aussie yen closed higher for the sixth time of the last 7 weeks. Weekly support, can't talk. Weekly supply level resistance, and that is not the correct one here because it's not. Because I know that I talked about that the prior week, and I did not go and put that for this week. Hang on. It's a bit upsetting. Hang on. Trying to pull up the analysis from the site, so bear with me. Okay, I've got it here. The Aussie yen finished the prior week with another new closing high. Resistance will be the weekly level at 78.97. Here we go. And that's on the website right here. Just didn't update in the notes I had here. 78.97. With support at 78.11. So pretty tight range though. And just to say it again, Aussie yen finished the prior week with another new closing high. Resistance will be the weekly resistance level of 78.97. And we pull it up on a weekly. Right there, 78.97. And support, you can see we're coming up with the 78.11. With that, we'll move into the guppy. So the guppy closed above 140, opening the door for a challenge of 41.10. Resistance will be 40.71 with support at 39.16. So pretty tight range though for today. So on the downside, 39.16. And on the upside, we're looking at 40.71. And on to sterling nod. So the sterling nod posted a gravestone doji to close the week. You can see that right here. Resistance will be 78.65 with support at 77.36. Once again, look how quiet we're trading. 77.36 here. And 78.65. There. And once again, taking a look where we're at right now, here in the pre-market, we're just slightly higher than Apple. Nothing, like pushing us on any outer limits or anything like that. The same thing here with Microsoft, pushing up against this 224. We're higher, but nothing, wildly bullish or anything. Same thing with Amazon. Google's just flat. Nvidia basically flat with just a tepid upside move. Same thing with Facebook. And Facebook, you know how important, we'll go to the daily, how important that 267 is. The key that I'm looking at once again, and just to, a moment. We'll pull up Tesla again. Of course, here's Peloton, new highs. And PayPal, a gap up here right now. Finally, we did open up a little bit higher. Netflix still on the weak side, but just a hair higher. And Tesla, we got to get above this, which is 677 here. But if you look at it on a 2-hour chart, you can see here we've got a little trend line going up against there. Once again, I really wouldn't be doing anything until we get past the first hour of trading. I can't say there's anything here that says, oh, you have to sell this, but at the same token, we'll have to see how much they can press the stops here. But that's all we have, and we'll see you in the chat room. And thanks for joining us here on the European Crossover webinar.